Welcome back, guys. The stock that I want to go over today is called Sangamo Therapeutics. And in this video, I'm going to do something a little different. I'm going to show you how I am doing an options play. So if you are interested in learning how to trade options, this would be a great video for you to watch. And I will do what I typically do in my other videos. I will go over the technical analysis and I'll show you some other information why I think this stock is set to be profitable at this price point. So to get started, we see the first thing, as always, it's trading above the 50-day moving average on the daily chart. And from here, if it just rallies up to the 200-day moving average, which typically happens right when the stock is on an uptrend and it trades above the 50-day moving average, we could see a 70% gain. And that's if you want to buy the underlying stock. But in this video, we're doing something a little bit different. We're buying the options, and I'll show you exactly how that will work. Again, nothing in this video is financial advice or trading advice. This is for educational purpose only, and I'm teaching you how to do an options play, and I'm just going to go over what I'm doing personally, and I want you to just learn from that. And then if we take a look at the 45-minute chart, we see that it's reversing trend, and it will do a golden cross at some point. The way it's looking, where the 50-day will cross over the 200-day moving average. So it earlier this week, it did test the 200-day moving average on the 4-hour chart, and now it's testing it again. And ideally, what we like to see going forward is for the stock price to trade well above this 200-day moving average on the 4-hour chart, and then that will eventually cause a golden cross. So the stock chart looks pretty healthy. And then if we take a look at the fundamental information, we see right here that they have a pretty high short float and short ratio. So that's also a good sign if the stock does start to rally, that it may trigger some kind of mini short squeeze. Now let's get back to the option chain. So this is the option chain that you can look up on Yahoo Options. And if you're familiar with the videos I make on this channel, this is how I scan through all the different option chain to find discrepancies for stocks that has great rally potential. And you can check pretty much all the videos I make. I show you the option change, and you can check from the time I post a video, usually within a week or 2 weeks, the stock does rally. And this is how I find it. So what I do is I look for just discrepancies in the options activity, see if, okay, is there more activity on the call side than the put side? So at a glance, since I'm already pretty experienced at it, I can tell, but I will just add everything up together here in Grok. And you can see that there is 22,000 call options activity and 1,500 put options activity. So, which is by activity, I mean the volume and open interest. So there's 15 times more activity on the call side, and that is not typical. Usually you'll see like a 1 to 1.5 or even 1 to 2 ratio, but a 15 times more activity, that means way more people are expecting this price to rally up to, like, $1.50, because you see like a lot of activity. The activity kind of dies off. Like these are probably $2, $3, $4 are just probably like just gambling type of bets, but you see a lot of activity. So this is just kind of beginner information if you're not familiar with options at all. So you can either buy options or sell options. So to sell options, you'll get the money, you'll get the premium right away. So if you own, like, say 100 shares of the stock, you can sell one contract and you'll collect that premium right away. But that will show up in the volume and open interest. And if you're just buying that premium without owning the stock, and you're expecting the price to rally to sell it at a profit, that will also show up in the volume open interest. So whether you own, even if you own the underlying stock and you're selling the premium to collect the profit right away, you still want the stock to like rally. You don't want to like the stock to like drop significantly, which then you're stuck with not being able to get out of your position. So either way, like, the activity in the call side is an indication that people expect the price to rally. So now for the fun part, how am I playing this option strategy? So I'm doing a very simple, just buying a call option. So at the $5 strike price, so let's go back here. Yeah. So at the $5 strike price, I am buying call options. I won't tell you exactly how many I'm buying. But I'll go over the math. So I'm buying call options at the $5 strike price. When I put the order in, my average price came out to 21 cents. So this is the last price, 17 cents. This is a spread, 0.1, 0.25. I just did a market order. So my option call price came out to 21 cents. So this is how we calculate profitability. So we take 0.5 cents and add 0.21 cents. That will be our break even. So our break even will be at 71 cents. So let's draw a line right here and make that 0.17, 0.71, 71 cents. And then the expiration, if we come back here, the expiration is for August 15th. So let's find that. August 15th is a Friday right here. So all we want to see, for me to be profitable on my options, we just want the price to be above this line by this date. We just want the price to be about 0.71 cents by August 15, and I won't lose any money on my options. But the reason options are so incredibly risky is, for example, if you just buy the underlying stock at this price point and say by August 15, it doesn't go according to plan and the stock's trading at 49 cents. Well, you're only 20% down. Not only because this is a micro stock, but you're 20% down. You could exit, take all your money out with the 20% loss, or just stay in it. And then it could just go right back up the next day or break even, because you own the stock. But with options, the reason it's so incredibly risky is that if by August 15, the price is at 0.49 cents, I don't I don't just lose 20%, I lose 100% of the money that I put in. So by August 15, if the option is below 0.50 cents, then I lose 100% of my money. So that's why options are so risky. And that's the bet I'm taking. Again, like if I this the reason I'm bringing you this stock specifically is because I think it does have a good rally potential from here. But if, say, like by August 15, it like trades up to like 71 cents and it's like down here somewhere, I still have some intrinsic value in my options where I can exit with some significant loss, but I can still exit with some, I wouldn't lose 100%. I'll only lose 100% of my money if it trades below 50 cents. Again, I took the least risky options. I took the least risky option. If you bought the $1 price point, you're at a higher risk to lose all your money. But again, it's significantly cheaper. It's like 5 times cheaper, and then gets even cheaper as you grow up the price. So if you're buying, if so, that's like super gambling. Like if you're buying a dollar option, like the dollar options for like super cheap, that's straight up gambling. That means like the price has to be above $1 by this price point by August 15th. Yeah, it has to be above $1 for you to not lose money on your options. Even if it's trading at 99 cents by August 15th, you'll lose 100%. If you put $1,000, you'll lose 100% of that money. If you put $100, you'll lose 100% of that money. So I am doing the least risky option play available, but it is still somewhat risky. So this was a different video. I want to know, did you like this information? Do you want me to make more videos on options play, or do you guys like the just stock analysis videos that I make on this channel? Please give this video a like, subscribe, turn on your post notification to get notified about like great stocks the moment that I find them, and interact with me in the comment section. I want your feedback. I want to know what you guys think about these type of video. Leave a comment. I'll respond to every single person that leaves a comment. And I hope you enjoyed this video. I hope this was informative. I hope you learned something. So I hope you enjoyed this video, and I will see you on the next one.